Hey everybody, welcome to my YouTube channel. My name is Benjamin Poole, one of the head traders at Verified Investing. I just want to say thank you guys so much for tuning in and watching my videos. BE was a better option to buy, or if it was another stock. But BE, I was mentioning that the daily RSI was really overbought and it was a potential pullback. And look at what happened. So first thing I did was I connected this low pivot right here, this secondary pivot right here. And I drew this trend line and I connected it up. And I want you to notice that BE got up into this resistance level multiple times. And then if you notice the RSI, it's not in the charts, but the RSI was actually signaling there was a potential move to the downside. I had an upside target because it was so close to the $150 level that I anticipated it breaking through 150 and then getting a nice pullback. That didn't happen. Look at what price action did. Price action came actually back down in and retested this pivot high at $122.90. It actually hit on this level 3 or 4 times. And so then eventually it broke down from the high to the low of today. This was actually over a 20% sell-off. And so I had mentioned that you were likely to take a good sizable profit if you were to jump into a BE short. Now, what are we looking for on the chart of BE now? We have closed below this $122.90 level. So if price action gets back into that level, this is going to be your next resistance level with a potential downside move all the way to $86.87. As you can see, this is a gap fill in the charts where price action opened much, much higher than this level. So when price action gets back into the level of $86.87, you're likely to get a pretty sizable bounce. Even though it did get close to that level on one occasion, this would be the second time, and so you still anticipate a bounce. If price action goes below that level, you do have all this consolidation that would break the support, and you could come back down to this gap fill, or even come back down all the way into the $54 level. So watch for a continued breakdown of $86.87. Through there, you have a nice couple different targets, $70 and maybe into the $54 level. Okay, the other chart, the next chart I wanted to go over with you guys is SoFi. So let's go ahead and pull this up. One of the members requested me to go over the SoFi chart, and so that's what I'm going to do for you guys. SoFi is putting in a couple different levels for me. Just like the other chart of BE, you want to create trend lines in the charts to see where price action could likely go. And so that's what I've done on the SoFi chart. So I've connected this pivot high right here from the high in February, secondary pivot high. So connecting these two pivots creates this upsloping trend line. Look at this. It hit it for the third time. So as price action drops, it goes back into that level and then starts to sell off. It actually got really close to that level one additional time, got right to about $33, and then a nice pullback. So you notice that is resistance. So what are we looking at for support? Same thing, just drawing trend lines. So you got this low pivot from the April lows. Look at how price consolidated right on this level on multiple occasions. This indicates that this is a pretty significant support level. So when price action gets to that level, it's likely to bounce. As you can see, price action then hit the upper end again, and then came back down and hit the lower end as support. Price action tried to get back down to this level again in the pre-market this morning, and now it's actually bounced from that level. So what are we looking for? We're looking for a movement below that upsloping trend line. So movement below. And then that doesn't signal that it's sold or it's getting ready to break down. What you want is actually a continuation move to the downside. This tells you that not only sellers are pushing it down, but they're pushing it down for a second day in a row. Again, that's not an opportunity for you to enter a short trade. What you want is you actually want to wait for a retrace to the scene of the crime. And the reason you want to wait for a retrace to the scene of the crime is if price action gets back inside of that support level, or now if it broke down, it would be resistance. If it gets through that resistance as it goes back up, you have a clear stop out. So if price action gets back inside of this with a continuation move to the upside, you can then stop out of the trade to minimize the amount of risk. But you could also take advantage of a much bigger move to the downside and probably pick this up or cover it right about the $21-20 level on SoFi. So that's what I have for the chart of SoFi. If it does end up heading higher, because it still hasn't broken down from this basically wedge pattern, the next resistance level is going to be right here at $34 if it can break this 32.08 level. Okay, the last chart I want to go over with you is SNDK. Give me a second while I switch over my charts. You guys can see this with me. Okay, so I'm going to erase all the drawings on here. I'm going to go to the daily time frame, which I'm at. I had mentioned that I want you guys to keep an eye on wide range red bar candles at the highs of charts. So here's what happened on SanDisk. SanDisk put in this nice wide range red bar candle after 3 or 4 days of up move. You want to stay away from stocks in the first 3 days. So it had earnings and then it gapped up, and continued to run. That's not a place to enter. You wait for this wide range red bar candle, signaling that the sellers are now taking control of it. And then once price action gets back up to this wide range red bar candle high, that is the opportunity for you to swing short something. The nice thing is you're playing it like it's a topping tail, which means that you're waiting for a retrace to the wide range red bar candle, and then you can always stop out at a close above this pivot top around $280. This minimizes the amount of risk that you're putting in, and you're also taking advantage of all the psychology inside of that red bar candle. In order for this sell candle to happen, you have to have buyers who are stuck inside of this red bar candle, who are thinking price action is going to continue up. They think, oh my gosh, I'm a genius. I'm getting this stock at a discount as it continues to flush out. So when price action gets back up to the top, you have all these buyers in here are now underwater who are willing to exit the position at a flat, break even, or even a loss, and that will drive the price continually down. Couple things to watch for. Now we actually need to watch for this low break of about $238. If we break below that level, look at this. You do have this wide range green bar candle, but your next level of support is going to be right about $200 at this gap fill. Okay, so that's what I have for you guys. Keep an eye on red bar candles. They happen a lot in the charts. Now we're starting to get some volatility. Now we can actually start taking a look at the relative strength index. Volatility is what we need in order to use the RSI to our advantage. Thanks again for watching. I really appreciate you. Hopefully you guys like this. You guys like this setup, and we'll see you guys next time in the charts. You guys have a great rest of your day. Take care.